thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. On the program today, Africa Development Body funds see opportunity in mining infrastructure. And Canada cancels loan to South Africa's Gupta family for Bombardier jet purchase. Plus, stirring of investor ways sells part of ShopRite stake. We'll start off the program with the markets, and on the African continent, it's the last trading day before Christmas, and most of the markets in the region were relatively quiet at intraday. In South Africa, the JSE index barely moved north side 0.05%. The market here in Nigeria was in the red. Egypt is closed today but was down on Thursday. Kenya closed high on Thursday. In the Middle East, the markets are closed for the weekend. On Thursday, Qatar's stock market resumed a rally from near six-year lows, while most bourses in the Gulf were little changed, lacking fresh stimulus. The Qatari index added 1.19% as Vodafone Qatar, the most heavily traded stock, rose 2.6%. Qatar Islamic Bank gained 3.1% in active trade. The index fell sharply in the months to mid-December after four other Arab states imposed an economic boycott on Doha. But signs that the damage is less than some investors had feared, and a supportive 2018 state budget plan announced last week are now helping the market recover. Qatari central bank data released on Thursday showed an outflow of foreign deposits from Qatari banks, one result of the boycott, slowing further in November as the four states ran out of remaining money to withdraw. In Saudi Arabia, the index was almost flat. It had risen in anticipation of this week's expansionary state budget for 2018, but has stalled since then, with the good news in the budget largely priced in. Dubai's index edged down 0.14%, with the most active stock, Union Properties, gaining 1.4%. Abu Dhabi index fell 0.23% to 4,349 points. In Europe, markets started Friday trading in the red as investors digested the latest in political and economic news coming from the region. Annette Wisbert has details. Good afternoon, Annette. It's the final trading day before Christmas. So talk to us about what's going on. We have the euro slipping against a number of currencies, including the US dollar and British pounds, after Catalonia's separatists appeared set to regain power in the region. Now, is the euro rout spreading into equities and bonds as well today?
Well, actually, we have seen the euro trading, well, we could call it sharply lower in early Asian trade, but ever since it came back slightly. So it's not really a huge loss on the forex markets, despite that independence vote in Catalonia, or at least the vote on whether there's a majority for independence or not. I think political risk, of course, is back on the agenda, but not like with a big bang, as investors are expecting the election in Catalonia not to result in a secession of Catalonia from mainland Spain. So political risk, yes, it's back, but the political situation in Spain is not easy at all for all parties there. But the majority view is that we won't get like a split of Catalonia from Spain, and by that perhaps like also some other regions in Europe being interested of doing the same. Having said that, we see equities a little lower across the board in Europe, with the likes of Spain, of course, being the biggest losers, the banks there taking, more or less the brunt, feeling the brunt from that decision in Catalonia. But on general, it's not a great day, but it's also not a great with like major losses.
Now, one of the company news coming into the market today is about the Swiss pharmaceutical giant Roche and U.S. Igniter today announcing the crafting of a definitive merger agreement for Roche to fully acquire the U.S. biotech firm. That's for $1.7 billion, or about $27 per share for Igniter. Is this a healthy deal for the market?
Well, it actually looks like, if you look at the market reaction, Roche is a little lower, but just like more or less in tandem with the whole sector. So there's not a huge selling on the news because Roche might be overspending. So analysts are saying that's actually a really good deal, and that deal also fits into the strategy of Roche, who was saying they are looking into bolt-on acquisitions in exactly that field, in cancer treatment of the future, because the company they're taking over, what they do, they have several medication in early test trials. And these medications will work on a genetic base to fight cancer. That's sort of the new way to treat when it comes to cancer treatments. And apparently it's a lot cheaper to buy a company, what Roche now did, than do the research themselves. Of course, R&D is a very expensive item when it comes to developing new drugs. And analysts are saying that is a good deal, it's not pricey, and going forward, that could actually also have some blockbusters for Roche in the making. Because as I said, the genetically modified, or not genetically modified, but cancer treatments based on genetics are the future, and that's what Roche now bought with that acquisition.
All right, like I said when we started this conversation, Annette, it's the final day of business before Christmas. How much of Santa gifts did the market receive this week, and did you receive any?
Well, actually, not too much of a Christmas present this week, I have to say. The markets in Europe are mainly flat. Some are a little bit lower, some are a little bit higher, but there's no real rally which we're seeing here before Christmas. But if you take a longer time horizon, the Christmas present actually really came over the year-to-date performance of the markets. Markets on average are up some 7 to 10% for the year-to-date analysis in Europe, and the US is even doing a lot better. They are up by more than 15%. So bottom line is all the equity markets are very much close to record highs or at record highs, and if investors were invested for the whole time, that is actually quite a good present for the year. Having said that, is that here to stay? For 2018, mostly analysts are not overly optimistic, given the already high valuations which we're seeing. There might be some more cherry picking when it comes to single shares, but nobody's really expecting that the rally will continue as it was in 2017.
Well, I guess we can only remain optimistic as we enter 2018. And it has been a wonderful week with you. Enjoy the Christmas.
Thank you,
Merry Christmas to you and your team out there.